tonight, so give a couple of seconds here. Also, while we're waiting, just so you know, I tend to talk a little bit too fast sometimes. It's not that you listen slow. It's just if you find I'm talking too fast, tell me in the questions box. Okay. The chat is
Right,
disabled.
so
Okay, that one works. All right. Yes, the chat is disabled, but the questions box is alive and well. All right. So just respond in the questions box. That's the easiest way. We monitor that. All right. One more thing I got to do, and let's get started. Here, I got to hit this button. All right. Good evening, everybody, and welcome to DayTradeSPY.com's Weekend Review. Intro to Trading. My name is Hugh, and it is Sunday, March the 15th, 2026. That's me with my beautiful dog, Lucy. She's now dead for a little over a year, but we miss her every day. I still got her picture up there. All right. Questions box open for your questions and comments. Again, I'm the only one that sees that, so we'll go ahead and say whatever you want. And we will get to those questions a little bit later on. Here's the standard disclaimer. Give you a couple of seconds to read that. Excuse me while I just okay. Okay. All right. Yes, lots of lightning around here. Lots of lightning. Okay. All right. You're alone responsible for all your own trading, and past performance does not guarantee future results. I think you all know that. All right. Here's what we're going to talk about here today, folks. We're going to talk about last week, the upcoming week, give you a little 2-minute tutorial, and answer your questions. Answer your questions. And get a little contest there as well. All right. A little contest. We'll send out an ebook for the winner, Triumphs and Tragedies. And yeah, let me just see. I need to find it's going to be an easy contest. Anybody can win it. We're going to be using a random number generator. And we're going to be doing that a little bit later on here tonight. So near the end. So this way, get to keep you here. All right. All right. So why listen to me? No reason. I never spent any time in a stock market or anything, stock trading, a stock exchange, except for I was in the Chicago exchange many years ago up in the gallery. Thank you for that. I just got a tea here. Hand it to me. Thank you. Um, but other than that, no. What I did was I learned all this stuff from the trenches, deep in the trenches, folks. Right after my own financial advisor blew out half my account, I figured I got to learn how to do this myself. So I seized my account. I said, "Give it back. I am going to do it. I can lose the money just as easily as the next person and have more fun doing it, right?" I figured it's my retirement. I am entitled to that. Hmm. Nice hot tea on a cold, stormy night here. Anyway, I discovered some pretty cool trading strategies that worked for me. All right, now I'm going to be upfront with you. There are unlimited number of strategies out there. You can trade a million different things now. We didn't have crypto back when I started this. I don't even know. We didn't have any of that stuff. Non-fungible assets. What is this? Somebody draws a picture, tries to sell, and then they sell it again and again. Come on. We options only came around in the 70s. Futures, all that stuff. There's of course equities, exchange traded funds, fairly new. Thank goodness for that. It's kind of like running your own mutual fund, right? But I discovered a few cool things that work for me, which is day trading options, the derivative options on SPY, the stock that follows the S&P 500. Very laser beam focused, laser beam focused at lightning speed too. And so now listen, if you get really good at one thing, think about this. This is for everything in your life, all right? What do they say? Master of all trades. No, was it jack of all trades, master of none? Well, that's the way it is in the stock market too. Excuse me. If you keep looking around for the next best thing all the time, you're probably not going to get it any good at any one thing, right? You have to really find something that works for you. And I discovered this really worked extremely well for me. I became very good at what I do, and can't do anything else now. If I was to ever get a job anywhere, forget nobody would ever hire me. Um, and this is all I can do. And this is fine. This is all I ever want to do. As far as making money, earning a living. So I kind of found my calling late in life. I did a lot of things in the past, a lot of things. Um, yeah, but anyway, I'm not going to get into all that. I think one day maybe we'll have a webinar just on that. Some of the wild, crazy things I did as in my mostly in my misspent youth. But anyway, day trading options on SPY. Um, but most of what I took a lot of courses. Okay, I took a lot of courses, but most of the things I discovered was outside of the courses. And the stuff that I teach is what I discovered. Deep in the trenches, what I learned. That hardcore stuff they don't teach anywhere else. But I'm looking for short-term breakout trades. And we're talking. We were in at a teleconference. My partner John and myself. We were talking the other day about this, and we're talking about how we don't have to do this. We don't have to do this, but the reason we do it is because we love to teach. We just love to teach people because we get excited about your success. All right, we're already successful. We don't need to do this. We're already successful. But we love to teach other people how to do this. When I hear back from people that they made so much money and they're able to fund their kids or grandkids education or put up enough money to start a business for their kids or something, or they're able to give money to the favorite charity or whatever they want to do. Those are the reward. Those are the real rewards in life. Anybody can make money. I mean, that's not that hard. I mean, apply yourself, make a few bucks, but uh, it's that teaching other people. That's the real reward. And John and I feel the same way about that. John is actually a litigation lawyer, but he doesn't practice law anymore. Not maybe the odd time he might take a case on for a friend or something, but he's not a practicing lawyer. I hate that word practicing lawyer. I don't want a lawyer who's just practicing. If I want a lawyer, I want a lawyer that already knows the stuff, right? And that's what he's practicing. But anyway, he's a litigation lawyer in the oil and gas industry in Texas. He's a Texas boy, and he turned into trading options and teaching it. And he loved it so much he kind of gave up the law profession to just do this trading. He's making a lot of money trading. Highly acclaimed, many industry publications he's been quoted and whatnot. Uses as highly effective tools to determine trades. And his philosophy is very simple. Take what the market gives you. He loves to teach others how to trade. By the way, you won't see a video of me here tonight because, uh, excuse me, I don't have a camera here, but we are heading back home next weekend. So we're going to be back to normal next Sunday night. All right. I'll give you the videos and everything next Sunday night. And get to go back, pick up the cat that we've been cat sitting here for a few months now, and it's so funny because somebody mentioned this in the questions about here how they missed the cat walking back and forth. I'd be doing these webinars, and she would jump up on the on my desk and walk back and forth in front of the camera. So you see this tail up there and stuff, and it's actually pretty funny. But it's so funny because you see the video of me on the screen, and she looked at the video, looking at me on the screen, and she looks back at me like, "How are you?" in two places at once. She's actually quite intrigued by that. And then she'll try and paw, the video, trying to see if am I real or what. Anyway, John and I have this saying. See, because here's the thing. John comes with his set of indicators, and I come with my set of indicators, completely separate. But when we arrive at the same conclusion, we announce it in the trading room, and we say, we were saying, when our indicators unite, our trades ignite. And man, they blast off. Wow. So when we say better buy puts, you might want to buy put options. By the way, I'm assuming that you people are. I'm assuming that you know what calls and puts are and a little familiar with options. I guess I'm making these assumptions, but if you are brand new to trading options and whatnot, let me know. And maybe later on at the end of the session, I'll go over a brief primer as to what options are and why we trade SPY and whatnot. Okay, let me know in the questions box. I know a lot of new people are online all the time, but I'm sort of making some assumptions here. Anyway, don't forget, of course, our newsletter, folks. Goes out every week, every Thursday. It's called SPY on the Market. Excuse me. I write this thing. It's very brief, 750 words to be exact. and very light, relevant, even entertaining. Subscribe. Just go to our website, daytradespy.com. This week's topic: do you have what it takes to be an options trader? Do you have what it takes to be an options trader? You might be surprised. So, I will probably be too when I write it. I see. I tell you what it is first, then I go back and write it. You all think I wrote it first and I just announced it. No, 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 no. I just kind of make it up along the way. Hmm. Tea is very hot. Let's take a look and see what happened last week. This is a chart. I use Schwab Thinkorswim. This is a chart of last week's trading. As you can see, it's kind of a crazy week. We had some really, really crazy things going on here. Low 656.80, high is way up there 682. Oh my gosh, what is this? 57.82. We had a range of about, oh my gosh, 25 points here. And then we dropped back down to 662. It's just been a crazy, crazy week. Of course, the war in Iran, should we be there? I don't know. There will never be peace in the Middle East. I don't know. We'll see what happens. But I think what happened, I don't know. Did you guys read the newsletter last week? It's actually about how the war affects the stock market. And I talked about how this Iranian war actually started in what 1979 or some ridiculous thing. We kept kicking the can down the road. Jimmy Carter should have probably went in there, took taken care of this right then and there. But instead, no, let's give Iran money, let's give them technology, let's give them armaments, let's just, and then of course they turned it on us. But anyway, here's what happened Monday. SPY staged a dramatic comeback. All right, so we dropped here, pre-market here Sunday night, threat of oil, right? Strait of Hormuz, blockage, all that stuff as we were entering week number two at that point. But SPY made a dramatic comeback on the hopes the war in Iran could be near the end. That's what the talk was. It's going to be a quick in and out. And at that time, if I remember the chatter, oh, the Iranian Navy is underwater now. They're all under the bottom of the sea. They have no ships left. This is what the chatter was. Anyway, SPY rose 0.8% as oil prices retreated a little bit off the high of nearly $120 a barrel. That's a lot of money for oil. That's why gas is a little bit more expensive at the pumps. And that's all about oil this week, folks. Oil fluctuated wildly on Tuesday, putting investors on shaky ground. Smile settled a little bit lower due to the elevated volatility. We had a lot of volatility here all week long. Wednesday, SPY dipped 0.08% as rising oil prices overshadowed stable inflation data driving volatility. We had, I think, a CPI number coming out, reports. So it was pretty good. As expected, it was pretty good. But what happened was, didn't matter. It wasn't about inflation, and it was just it's all about oil. This week is all about oil. Oil takes a new high again on Thursday, surging over 9% to cross $100 a barrel, driven by intensified conflict in the Strait of Hormuz. So the Iranians are blowing up ships that are trying to get through the Strait of Hormuz, and the U.S. is going in there and helping ships escort out or whatever, and bombing. The bombing's going on. I don't know how much is left of this country Iran to bomb anyway. Last I saw, they bombed something like 3,000 targets. Country's not that big, is it? It can't possibly be a whole lot left, is there? I don't know. I've never been there, so I can't comment on some of the craziness over there. But Friday, SPY dropped for a third consecutive week with high oil prices and the threat of inflation as investors navigate this high volatility. Things were looking pretty good in pre-market. We started going up a little bit here. We started going up, but it just wasn't meant to be quite yet. We started going up here and it looked very positive. We were breaking up all kinds of resistance levels, quite a bit too. And then, oh my gosh, it took a turn to the worst, came back down again. It's like, oh, not so fast, Buster. The bears wrestled it back down. From a seasonal standpoint, this is what seasonalities look like, folks. The blue line at the top is where SPY is now. The red line at the bottom is the average of the last 5 years' daily close price. As we zero in, historically over the last 5 years, SPY rose about 2 points, and into the next week it rose about 5 points. So if we stay where where the path as to what we did in the last 5 years, we should probably edge up a little bit higher. See what happens. All right, let's take a look and see what happened here. Um, hmm, more lightning. Okay. I hope the internet lasts. So far, so good. Conflict in Iran disrupted global oil supplies, sparking volatility. Equities ended lower. Just talked about that. Inflation data indicated gradual easing, but is overshadowed, of course, oil. That's the big news of the week here. Fed's expected to keep interest rates unchanged in this week's meeting, as oil prices are expected to be temporary. May delay but not deter the Fed's path towards additional interest rate cuts. They're still pretty committed on cutting rates 1 to 2 times this year. At least that's what the last report was. Of course, it can change, and there's going to be Fed announcement later this week. Uncertainty aside, fundamentals are still strong. Global growth are expected to be solid, and consumers and businesses are still spending, still growing. Global economy remains with positive momentum. Okay, this is from the experts, and so things are still looking good, and hopefully that war will be over soon. Trump is saying we want you to surrender. We really need you to surrender. And Trump is saying, "Oh, I think the new supreme leader is dead." That's the last I heard. And then I heard something from Iran saying, "No, no, he's alive and well." So that's the trouble with war. You never know what to believe anymore. Um, and another news report I read today, the FCC, Federal Communications Commission, is telling the media outlets, check your news, right? Be accurate in your news forecasting. Cut the fake news because if you don't, your licenses are not going to be renewed. So I think they really want news to be accurate. Imagine that. Wasn't there a time once when news was accurate and fair and, oh, well, it must be true. I saw it on television. It has to be true. They don't report anything that's not true. And radio too, but well, maybe with a little lesser degree with radio, but we still believed it, right? Oh, I heard it on the radio. The radio. I heard it on the radio, and I saw it. Oh, but television, that is the gospel truth. If I saw it on television, it is so true. But anyway, now what did I see? A survey or something. I think only about 0.9% of the people believe in everything they see on TV. It's pretty dismal, and the ratings are horrible. So social media is taking over, and of course, we all know that social media is the absolute truth, right? Okay. We live in a world of lies, folks. Absolute lies. Okay. Hmm. Absolute 100%. Everybody is into the BS, And who can spew it off? And you know what? We don't even have to do it ourselves. You just get AI to do it. Okay. So no, there's no more truth. No more truth. So many things we don't know. We just don't anyway, this is a chart. Equity markets in regions more heavily reliant on energy imports have underperformed. So here's the thing. This kind of talks about the performance of the global equity markets in March relative to their reliance on energy imports. And you can see how places like Japan and Korea, which rely heavily on oil, have lagged in March. Their their energy imports, of course, are the blue lines here, how much of their energy is imported. And you're given these numbers on the bottom of the stock market returns from for the last few months here, March, rather January 3rd to December the 3rd. Sorry, March the 1st to March the 12th. Just this week, almost 2 weeks here. The stock market had returned, so much here, but um, we see that if you're heavily reliant on oil, the stock market is really trailing along here. Look at South Korea; they're down 13%. Japan down 9%. Europe 8 9%. We're down, but only 3%. because we are now an net exporter of energy products, which makes you wonder why are we so concerned about oil? But you know, who knows? It's a power thing. This chart here, energy inflation set to rise in the coming months, according to this forecast here. This tells us the relationship between CPI, Consumer Price Index, and WTI. That's the sweet crude oil that you get in Texas here. All right, Texas tea. So sweet you can drink it, right? Uh, don't drink it. It's, but anyway, it just makes it easier to you know, turn it into gasoline, right? To filter it out or whatever they do with it to get the gasoline here. But anyway, we can see how the recent spike in oil prices, energy, CPI is likely to rise in the coming months. Refine it. That's what I'm looking for. Refine. So this is the forecasted here um, line as to where we're going here as for inflation and versus the price of oil. Okay. Um, S&P went down again this week, third week in a row. We lost 1.6%. Total year to date, minus 3.1%. Although they are expecting it to go, I think, what did I see, about 12, 15% overall year to date back to the upside. I am still of that opinion as well, that after the war in Iran subsides, that we are going to go up. But I'm not so sure. It's like, isn't Iran going to run out of munitions or whether it's their stamina or whatever they have? I mean, they can't last forever, can they? Is this a question we're going to outlast them? The problem is a lot of the ammunition that we send over there, the missiles and stuff, they're not cheap. They're not cheap. They're like millions of dollars. Every time you fire one of these things, it's a lot of money. You know, you can only last so long, right? We don't have that kind of money, do we? We're on borrowed money. We are what, 30? Let me just pull up a thing here. Well, where did I see it? I can't. I'm not going to find it out. We're trillions of dollars. The clock is running. Let me see if I can find the U.S. debt clock. You ever see this? It's kind of an interesting thing here. U.S. debt clock. Let me see if I can find it. I just thought of it now. I like to pull this up every now and then just to see how we're doing. I'm going to just bring it up here just to show you. So this is a website, U.S. debt clock. This tells you what the national debt is. And as you can see, it's zero. It's all blank. Why is it blank? Well, you know what? I don't know why. It should populate here momentarily. Um, excuse me. Sorry, I just got itchy throat here tonight. I think it's my internet. I think my internet is slow, and maybe it's weather related, whatever. But there we go. Now we got it populated. Hope you can see it okay. We're almost we're pressing $39 trillion. 39 trillion. How do you work to actually? There's 100,000s, millions, 100 millions, and trillions. We're pushing up into 38, almost $39 trillion. And wow, look at that. Somebody's spending a lot of money here. Anyway, I can watch that whenever I get bored. I come in here and watch it. Federal tax revenue is at 5.4 trillion. Um, if we if we stop spending and continue on the revenue, will in what, about 8 years, something, if we apply all of the tax revenue to the national debt, we'd be out of the soup in 8 years. That's assuming we don't spend anymore and and we don't do anything. We still continue to give the feds all their tax revenue. But anyway, I digress with that. So I'm going to just remove that, minimize it, go back. Folks, let's take a little poll here, folks. Let's take a little poll. Just curious to see. You know what? This is the topic of the day: oil and peace in the Middle East. Quick question for you. Do you think there will ever be peace in the Middle East? Yes, no, don't know, don't care. That's their problem. Let me know the questions about it. Just curious. Oh, excuse me here. Okay. All right. Okay. Lots of no's coming in. Lots and lots of no's. No, 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 never. No, nope, no. Wow. Don't know. No, no. Oh, Scott says there will be. Why do you say there will be, Scott? Just curious. Just curious. Uh, well, let me know in the questions box, Scott. Just curious. Uh, I don't know. It's an ideology thing, right? It's all an ideology thing. It's not just about like, oh, I want your land, I'm gonna go get it, Not like, World War II or something. This is an ideology issue and it's spilling over into the rest of the world. That's where you have craziness going on, even in our country here. This is not good. So anyway, okay, so overwhelmingly just about every I think I had like one yes. One yes. Another yes. Two yeses. Okay, when Jesus comes. Okay, well, that's interesting. I heard he had already come, and I heard he came in what is known as the Baha'i faith. But we'll see. We'll see. It probably takes 1,000 years before that's going to come to fruition. But eventually it'll come. Yeah, maybe. No, it never has. So I kind of wonder. It's funny because these it starts with religion. And when you look at that part of the world, that's where Jesus came and Muhammad and all these these manifestations, they sort of originated in that Middle East area, right? Because that's where the trouble is. It's like God sends his manifestations to the troubled areas of the world, but whether we people are receptive to any of that, um, that's another question. But I think, I think I'm not sure what the answer is, but I think at some point the answer is going to have to be yes, because the alternative is, global annihilation. I mean, you know, it has to be. It has to be. But they have to go. This regime in Iran has to go. And okay, Scott answered here. Right, Iran is the chief sponsor of terrorism, and they will be gone. Gaza is the process of being resolved, but in another generation or two. Yeah, okay. It'll be a while, but it'll be well, hopefully sooner rather than later. Hopefully in our lifetime, and for our kids and grandkids. World peace I think is not only possible, but I think it's inevitable. I think we have to have it because if we don't, what's the alternative? Anyway, that's diverting off everything here now that we're talking about. But just really curious to see if this this war now in Iran is the catalyst that is going to move that forward, into peace. And by the way, the other countries around there are also very much against Iran, and they're all taking sides and bombing each other. Oh my gosh. Folks, let's coming up to the week ahead. We've got the Empire State Manufacturing Index, also known as the New York State Manufacturing Index. That's on Monday and Tuesday, pending home sales. Big day on Wednesday. We've got producer price index. Hmm. But the big one is so PPI, the big one is the Fed funds rate. So last I saw, I think it was like what 97, 98% of the respondents believe the Feds are going to keep the funds the same, and then about 2% or something figure they're going to reduce the interest rates by a quarter point. Um, Personally, I think they're going to keep it the same. I don't think they're going to do one thing or another right now, especially with Fed Chair Powell on the way out. I think he's not going to want to stir it up. So that's just my opinion, but we'll see what happens. His days are numbered. When is the new Fed? Let's see when the new Fed chair takes place. When does new Fed chair start? Okay. That's amazing what you can find out from the internet here now, especially with AI. It's craziness. Right. He will be starting. He'll be taking over when Jerome Powell's term is over, which ends in May. He'll be taking over in May, so a couple months. So I suspect Powell's probably not going to want to rock the boat right now at this point, but we'll see. We'll see. We could be in for a surprise. Anyway, Thursday, unemployment claims, Philly Fed Manufacturing Index, and new home sales, and Friday, nah, not much of anything. Just a meh day, nothing really. So what does all this mean as far as volatility is concerned? Well, I can expect medium on Monday and Tuesday, high on Wednesday and Thursday, and low on Friday. So when the volatility goes up, there's going to be a lot of action on the market, a lot of buying and selling. Um, and along that, with that comes ability to make some money. It's when markets don't move very much that's a little bit more challenging. And days like that, that's when you got to kind of settle for a little bit lesser of a gain on the market. But when the markets are actually in motion, I can just get in there and you know pick up a few points here, a few points there, and that adds up to a nice bag of cash at the end of the session, right? Okay, so all right, let me just see who's all on here. A lot of people online, and just really curious. Some of the people that are asking questions and commenting are just curious. Where are you from? Let me know in the questions box where you're from. I know that people from all over the world here. Well, not about the whole world. A lot of people from the South. Got a few Canadians. They got some people out west. A few people from New York, New Jersey area. My good friend Mike from Jersey City is on. Okay. Hey, some of the questions box. Just curious. Here's some more comments here. World peace never run a crash course with China, World War III. China's not going to. I don't think China's going to be militarily involved. So they're economic. They're all about economic. They're coming in and they're taking over economically. I mean, just walk through. Oh my gosh, walk through any store. What do you want? Walmart? Target. Do you want to walk through Home Depot or Lowe's or any of those stores? Go ahead. See how many things are made in the U.S. versus how many things are made in China. Hmm. Um, Even this cup I'm drinking from, it's they call it fine China. You know? But it's unbelievable. And we want cheap products. You know, we vote with our pocketbooks, but we're not willing to pay what it would cost to make things in the US. We want things cheap. So we import them, and the countries that make them cheap are clothes. Mostly they're made in, where, Asia, India, Vietnam, I don't know, these other countries, right? Um, China is, oh my gosh, they bypass us as far as technology. Check out some of the YouTube videos on the electric cars from China. Unbelievable. Like it's, beyond unbelievable what they can do. I've even seen a video where a Chinese electric car shakes the snow off of itself. Really? I saw a video where the suspension of this one car was unbelievable. They stacked all these champagne glasses full of champagne on top of each other on the hood, and then they drove this car over potholes, and not a single drop was spilled. Like, really? Anyway, technologically, I don't know. I don't think we're ever going to catch up to that, but and they're going to come in as long as we keep wanting cheap goods, right? Everything is cheap and lots of it. They're going to nail us economically. That's just. But anyway, I don't know. I don't know how they were going to get out there. But anyway, let's see. All right, Georgia, Tennessee, Santa Barbara, California, Wisconsin, all over the place, New Jersey, Montreal, Old Virginia, New York, North Carolina, upstate New York. Another one, Michigan, over the South Dakota. Okay. I got somebody in Seattle. And okay, cool. All right. Anyway, moving along here. Don't forget, for folks, whenever President Trump speaks, volatility tends to go up because you never know what he's gonna talk about. Okay. I don't even know if he knows. But anyway, expect elevated volatility. So how do you know when he's going to speak? Go to a website called forexfactory.com. It's a free website. It gives you a listing on the calendar. And let me just pull it up so you can actually see this thing, so you can see how it works. Okay, this is it right here, forexfactory.com, primarily for foreign exchange. But go to this calendar right here. Okay, you can scroll down here. I'm more interested in the US dollar, currency US dollar. There's your times. You can set the time to your time zone. Just go up to the time at the top. Click on the option. You can change your time zone to wherever you are. And then gives you the news. You want to know what the news is? Click on the file. Click on the file. Let's just come down here. Okay, let's take a look at the PPI report. What is this PPI? Click on the file. This opens up here, tells you all about it. Producer price index right here. Explains it, tells you why it matters, who's watching it, when it's released, all kinds of stuff. And it gives you, these are the three columns I'm interested in, the actual versus the forecast versus the previous. Okay, generally speaking, if the actual is better than the forecast, well, let me go back so I can show you in time. Okay, if the actual is better than the forecast, it comes up green. If it's worse than the forecast, it comes up red. Okay, and if it's as forecasted, it comes up black. So that's how you can tell. And right here, President Trump speaks. It's scheduled. So as soon as they find out, they post it on Forex Factory. And so you'll expect elevated volatility whenever he speaks coming into that. So it's good to know that. Okay, forexfactory.com. No big secret. You can find these things. All right. Anyway, that's the way I see volatility ahead. And let's take a look and see what else we can talk about. 2-minute tutorial, or should I stay on the sidelines during these volatile times? This is a comment I get a lot these days. And hmm, we did actually teleconference the other day. Excuse me, a lot of people were online on that. I hope some of you were able to join in and ask questions. But a lot of the comments were or questions were, should I be sitting sitting in the bush right now until this all clears off? And we're saying no. So two reasons. Number one, let's say you're, 401ks or something, your retirement savings. Well, you cash out now. If everybody cashed out, what's it going to do? It's going to send that down. It's going to send the long-term markets down, right? Because everybody's liquidating their accounts. This is why the banks all went bankrupt back in 2008 or 2009 or something. We had a lot of banks go bankrupt. Why bankrupt? Because people took their cash out. See, banks don't have cash. People think banks have cash. They don't have cash. If all the depositors went today, right at the same time, one day, to get their money, a bank would be bankrupt. Oh my gosh, probably by 10 o'clock. Anyway, and that's the thing. You have to weather it out. That's more of a longer term strategy. Markets go up, they go down. Your equity fluctuates. So stay with it because when it turns around, and it will, it's not going to go on forever. All right, it's not going to go on forever, and it is going to. I think Trump is talking about, exiting the war already. He's already talking. I hear chatter about that. And if it's true or not, or when it happens, who knows? But eventually, that will turn around, and the markets are going to pop back up. So you don't want to miss that opportunity for that growth that you're going to see as the markets return to normal. Now, for us day traders, it doesn't matter. You see, we make money both going up and down. So when we see, okay, the fundamentals are, okay, if they're in negative, oil's going up, inflation, whatever, it's going to be down market. Well, we watch the technicals and we enter when a technical setup occurs. We make money to the downside, cash out, make a few bucks, take it to the bank. Hey, it was a good day. So to us, that doesn't matter. That's what I'm saying. Stay, don't get out of the market just because we're in volatile times. A lot of money can still make money. The markets are still there. Markets are still open. Trading still happens. Why wouldn't you be in it, right? Watch the implied volatility on options. Now, when the implied volatility gets absolutely totally stupid crazy, right? 30, 40, 50, 80%, these kinds of numbers, then it's best to stay out of the market and just let it settle down. But the reason is because when the volatility is really, really high like that, that means the option prices are very high too. And that volatility on the options doesn't stay high for all that long. Usually it'll settle in. And oftentimes, even in pre-market, when you see it at 30, 35, 40%, shortly after the market opens, you'll see the volatility pull back to 20, 25%, 30%, something like that. It'll come back down. The thing is this, you get into these high volatility situations, you're paying a lot of money for these options. And then when they suck the volatility out of it, the value of your options goes down as well. And you don't want to be stuck holding the bag on an expensive option you just paid, $8, $9, $10 for when it's only worth 3 or 4. Um, that you have to watch. All right. So, and that's the thing. The higher volatility is, the more expensive the options. Watch that IV. If it's over 25%, I tend to stay out. Then I tend to stay out. Well, I'll just wait it out. That I will wait out. But the ideal for me, the ideal volatility is somewhere between 18 and 23%. I think that's pretty good. That's something that's volatile enough that I can make money. It's a nice little sweet spot. That's a sweet spot. Okay. And that's what I say. That's just the sweet spot. So, but it's not that you can't make money. When it is over 20, 23, 24, 25%, whatever, you can still make money as long as the volatility stays elevated. That's the important thing. You want that volatility to stay elevated. And if you don't see it subsiding, then go ahead, get in real quick, make some money, get out. Okay. What to do? Take extra care in your entries and exits. Trade small, trade often, take smaller gains, and stop trading when you hit your daily target, your profit target. And this is the big one. Um, this is one that I struggled with, and I know other people have too. They make a lot of money, right? We get in, make, oh, let's say my target is $1,000 one day, or even $500 one day. Well, let me see, it's 9:45 and I already made, $600. Hmm. So I want to keep going. The market's open, volatility's good. You know, you want to keep going, right? I don't want to stop yet. I just started. I'm cleaning up. So you want to keep going, keep going, keep going. And you keep going and you feel pretty good about it. But all of a sudden something happens. You're in that last trade. Well, it turns out to be the last trade because you're not trading anymore because now it turned against you. So now you're holding on, whether you got greedy or whatever it was, you got a little cocky. Well, I made all this money. 8 trades in a row that were successful. I'm going for number 9 and 10 and 12, and then it turns on you. Now you're sitting here holding the bag. Well, what's going on, right? Folks, when you hit your daily target, just stop trading, wrap it up, go do something else. Go play with the kids, grandkids, whatever. All right, our trades this week. Monday, we got 4 wins, 1 loss. Tuesday, 5 wins, 6 wins, and one break even on Wednesday. 7 wins on Thursday. Friday, it was a pretty mixed bag. 5 wins, 2 losses, and one holdover into next week, which is a call option, and I believe it's going to go up. And just in checking the futures, they are currently up on the S&P 27 points. Looking like the market wants to gap up here. No, that's the Qs. Sorry, I am looking at the wrong here. Qs and SPY go together anyway. Sorry, still looking like it's gapping up. Look at this. We settled in here on Friday, way down here. Where were we here? Friday. We settled at, we closed here on Friday at 662.05. 660, is that right? No, 660, we closed at 662.30, 662.30, okay? That was our close, and all right now, it's not to say that this is going to continue or it's going to go higher or lower. This can change very quickly, but we're already up about 2.5 points here from Friday. Yeah, this is where we are right now. And let me extend this over to the left. So if this holds and we head into tomorrow, pushing up through this resistance and continuing on, we could actually see much of this drop from Friday be eliminated. And I say that because we came down pretty quick here on Friday. Okay, we came down pretty quick. You can see how here. Let me just expand this here with this white line here. I'm going to just thicken this up a little bit here so you can see it easier. We can see how we came down pretty quick. And oftentimes I notice that when you get this big drop like this, a sudden drop, it breaks up through resistance levels and it goes up fairly quickly as well. So we could see a fairly quick move back to the upside. There's going to be some levels of resistance that we are going to have to deal with. And let me just take a look and see where they are. All right, let me see here. Oh, hang on a second here. Okay, so there's going to be resistance along the way here. These are just estimates. I think where are we here? 664.92 already? Yeah, 664.92. Our next major stop somewhere probably around here. These are levels of resistance that we're gonna encounter. So you can expect some bounce at these levels up in here. Okay, before we go up. And just out of curiosity, let's just throw in a Fibonacci level as well. I know my associate John, he loves Fibonacci. He lives by Fibonacci. Let's go, I don't know, high to low. And let me see what the extensions are. And look at that. See those levels are roughly where I drew them in. Look at that. You can see. I'm just going to see if I can maybe get these. Okay, let me take a look here. So I've got the 38, 50, 61, 38, 50, 60, 61. I want to let's see, was it here? Make these a different color here. Let's just do this here like this. Okay, different colors here. This just kind of gives us an idea as to the Fibonacci levels. You can see how they just about matched up to most resistance levels that I had drawn in. And there they are. I mean, they're pretty close. Some might not be exact, but some are. This one here is pretty exact. What is this, the 50%? No, the 61. The 50 is pretty close. And again, these are estimates. But you can see how the Fibonacci's work hand in hand with those resistance levels. So as we push through them, and here's the other thing, as we go up into higher, as we push up higher into the market here, to the upside, buyers are going to attract more buyers, right? Money begets money. And so I can see how this is going to continue to the upside tomorrow. Now, that's what I say right here at 8:48 p.m. Eastern Time, Sunday night. A lot can happen between now and Monday morning. I've also seen it where, it's looking very good on Monday morning, and all of a sudden, we're up to 30 and a quarter for the S&P futures. Come Monday morning, it's a negative 38. So it could flip just as easily, but I see all three of the indices, right? The S&P, the Nasdaq, and the Dow. That's what these are. Slash ES, that's the S&P 500. Slash NQ is the Nasdaq, and slash YM is the Dow. Slash CL is oil, and slash GC is gold. So it looks to me like money is flowing out of gold and oil into the equities right now in pre-market trading or post-market trading or whatever you want to call it, and after hours. So after hours can be very weak. You're going to see low volumes. It's just, brokerages trading against, with each other and whatnot. But we'll see what happens here tomorrow. All right, we'll see what happens. But I could see an up week. There could also be an up week because of the Fed announcement and some confidence in that. All right, so we'll see what happens. Anyway, we have this thing called the 2026 goal. This is where we track all the trades in the trading room. And we're recording as if we're buying 5 contracts per trade. Everything in the trading room is being counted on that. It's included. So if you just follow everything we narrate in the trading room, all right, this is what you would have had from early January to now. You'd have been up $9,330. That includes the losses. Yes, there are some losses. I'm still holding a position here, and so we still be up 93.30. It hasn't been all that easy. It's been a bit of a struggle, but we are into this 93.30. That's as if you're just buying 5 contracts at a time. So, folks, especially for those who are new, might want to know what we're doing here. Well, you can learn and earn. We have actionable plans that you can, you buy it right away. You can implement them right away. No lengthy training is required. It's not like you got to go back to school for any length of time like that. Folks, this is what we do here at Day Trade SPY. I've been doing this since 2010. Now, I'm going to tell you about it. The inner circle, all right? This is where you're going to get our morning market analysis along with a follow-up report. You'll also be invited to our Wednesday night interactive meetups, which are recorded. And a lot of people in Europe are saying, well, I can't make it because it's like 3 in the morning for me or whatever. It's okay. It will be sent to your inbox. The next morning, you just wake up. There it is. Concise, informative. This is all you need. John is the one that writes this, and he puts it all together. He scours all his news feeds, Twitter feeds, or sorry, X feeds, all the news sources, brings it all together. The technicals, the fundamentals, the market sentiment, packages it into a really nice package and sends it to your inbox every morning around 9 o'clock. Let us do the heavy lifting. That's our motto there. Guess what? $2.99 a year. I would gladly pay $2.99 a month for this service. 299 a month. I think Eagle Financial Products kind of missed the market with this. They should be 299 a month, but they're charging 299 a year. Why? Because they're a bunch of nice guys. That's really why. They want to get you trading, making money, and helping you along for only 575. I'm not even sure it'll buy me a coffee and a coffee at Starbucks. I don't know, maybe a small or whatever they call them. Anyway, don't worry if you don't get these QR codes. I will present them all at the end as well. That is the inner circle. We've been doing that. The inner circle has been around since 2010. And that was the very first service that we had provided when people started to course me into showing them what I am trading every day. All right. So they said, Hugh, can you put up your trades on the internet so we can see? Okay, sure. That's what came to be the inner circle. We also have the signal. Now, a lot of people might not want to or are able to watch the markets all day. I get it. You're taking the kids to school, you're on your way to work, you're driving around for work, or whatever it is you're doing. Excuse me. But you've got your cell phone with you and you've got your trading platform on your cell phone, and you are able to execute trades as you get the signal. Now, the DayTradeSPY signal algorithm based 3 to 5 times a week, sent to your cell phone email, buy it immediately, put it up for sale for 5% gain. If not sold by the end of the day, sell it at market close. Statistically, it works very well over the long run. Some days you're going to see some losses, but over the long run, you're going to just keep trading the same amount of money, or the same number of contracts, I should say. Let's say you're trading 5 contracts. Just buy 5 contracts. Buy 5 contracts. This is a long, slow gain. All right. This is the turtle and the hare race, right? It's the turtle that's going to win this race. That's what this is. If you just want a nice, easy trade, this is what you do. Just buy it, and if it hasn't sold by market close, sell it at market close. By the way, there's enough time on these for expiration. They're not same-day expiration, so it's not going to be at zero. There's still going to be some value in the option at market close, but it's been working very well. 399 a quarter or 1495 for the year. 1495 a year. Same price as the pick of the day, which is similar but a little bit different than the signal. Now, the pick of the day, this is where John and I get together every morning and we hammer out, well, where do you think it's going to go? What do you see, John? I'll tell you what I see. You know, bang, 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 double bottom, inverse head and shoulders going up, some news, this, that, whatever. And he'll tell me what he sees. And then we kind of come to a consensus and then we send it out to you around 9 o'clock. Actually, just after 9, you should get it. Okay. This option is looking to buy right at market open versus the DayTradeSPY signal, which could be any time in the morning. You could actually get that signal at about 11 o'clock in the morning, anytime in the morning. Okay. But this one is going to be to buy at market open, and then you sell that for 6% gain. Again, if not sold by 4 p.m., sell it at market close. Again, $3.99 a quarter or $14.95 for the year. Trading room. This is our piece de resistance. Is that how you say that? Hosted by John and myself. We are both professional traders. This is what we do. This is not something we do on the side or, whatever. This is what we do. And it's interactive, learn and earn, fun, right? We have fun. We fully narrate our strategies every morning, 9:20 to 10:30, recorded for later review as well. This is the best value. Yes, it's a little bit more money, but the value is really here. It's the live streaming where you are going to learn everything we do. You can ask questions and we answer them. $24.95 a year or $6.99 a quarter. Now, here's the cool thing about it. All of our programs offer a 30-day money-back guarantee. But I will say, and as I mentioned this last week, I have been hearing some chatter. They are looking at reducing the 30-day to maybe a 7 or 14-day money-back guarantee. But if you get in here early enough, right, you're going to be grandfathered at the 30-day money-back guarantee. So this is a no-lose situation for you. Absolutely no-lose situation for you. Okay, so let's get into some questions. Okay, so how do you sign up for the free Thursday newsletter? Okay, Robert. So go to the website daytradespy.com. Daytradespy.com. Let me see if I can find it here. It's not a newsletter. I go to every day, so I have to see if I can find it here. Okay, this is it right here. Daytradespy.com. I know it's not a very flashy, um, you know, website, but now what you're going to see a little bit differently than I am here than what I'm showing you. Okay, you're going to see a pop-up come in here. Once you're on it, I think once a day or something, the pop-up doesn't come up, but you'll see a pop-up here, asks for your email address. Just leave us your email address. That'll put you on the list, and you will get the email every Thursday. Conversely, if you don't want to subscribe, you can still get the Spy in the Market here. A little bit late, a few days late, but go up here to the top left where it says Spy in the Market newsletters. Click on that, and you can see all the newsletters listed right down here. All the newsletters are listed right down here, okay? And there they are. So, and it goes back to the beginning of time. So that's how you get that. Okay. Right. I stayed out last week. I was on travel. Where do you find this information? Volatility. I get volatility. I'll show you here. I'll show you where you get volatility right here. Okay, so if you're in Thinkorswim, I look at it right here, which says implied volatility. Let me just get this straightened out here a little bit. So get these guys off. Let's get rid of the open interest. Okay, we don't need this. Okay. Okay. In fact, I'm even going to take this off too, just so implied volatility, get rid of the volume. Okay, let's see if this will work here. Still got the volume in here. How come? Customize column sets volume. Remove, open interest, remove. Okay, this is it. Okay, there we go. You see where it says implied volatility right here on the calls, same on the puts. This is the number I'm looking for right here. Implied volatility. Right now, for the 20th, we're looking around 23, 24%. That is tradable. That is tradable. A little on the warm side. Okay, I'm not gonna kid you. A little warm side, but that is still tradable. Volatility on the downside, on the put side, which that puts on the right, calls on the left. A little high on the puts. I would probably not get into it on the puts because at 39%, I don't really like that. I don't like to pay $11, $12 for an option. That's just too high. The other thing which you'll find with high volatility is high bid-ask spreads. 1158 versus 1185. I mean, this is after hours, so yes, this doesn't really, this doesn't really count. But when you get a 27 spread, that's a lot of money on a spread. Okay, you don't want to do that. You want nice tight bid ask spreads. This is good here. A 4 cent spread on the calls. That's good. 752, 756. That's a good spread. Okay, so that's where you get it on Thinkorswim, right there. Okay. All right. What other question? I see it's an 8:59. I don't want to hold you all night here. I don't want to hold you all night. What I want to do is move along here tonight because I say this every week, but then I don't actually do it where I let you go. I hold you ransom, and I feel bad doing that. But anyway, any other questions? That's it for questions right now, folks. Let's have a little contest here. Pick a number between 1 and 100, and um, I want you to put in the questions box. And I'm going to give you about a minute to just pick a number, and then I'm going to pull up my DayTradeSPY random number generator. And with that, I am going to run the generator. We're going to generate a random number. All right, this is what we do. We do this every week. And let me just see here. My famous random number generator. It's truly is random. And then we're going to spin the wheel, so to say. And the person closest to it is going to get tips, tricks, and traps. An ebook I wrote a while back, updated it for 2026. Tips, tricks, and traps. And we're going to see who is going to win it. The person closest to the number is going to win it. All right. So um, we are going to win it. Let's see. And I'm just going to give you another minute here to put your numbers in. I have your names. All right. And we're going to, okay, where did it go? Here, I'm going to pull it up. Here it is, right? That's not the number, folks. That's not the number. That's last week's number or something. Just pull it. Okay, I'm gonna give you another 5 seconds to get your answers in, okay? All right. Five, four, three, two, one. Okay, we are now cutting off the entries if you don't have your number in here for tips, tricks, and traps. All right, too late now. I'm going to come up here and I'm going to count down from 3, 2, 1. Hit the button. The number is 97. Now I'm going to go up here and see who is the closest. And if it is a tie, you'll both get the number. Okay, scrolling down here. Okay. 82 for Robert C. Oh, Rich McC is 92 there. Okay. Jackson came in at 95. Jackson K. Jackson K gets the ebook, Tips, Tricks, and Traps. Congratulations, Jackson. Where are you from, Jackson? Brooklyn, New York. Okay, cool. All right, congratulations to Jackson. I will get that email to you soon. Don't forget, of course, the recording is also going to be sent out. And with that, let's get rid of this. And I will get those QR codes up here. Thanks for joining us. There are the QR codes. I'm going to leave this up here during the duration of the song. I guess about 3 minutes. Get your phones ready, folks. Get the pictures, the QR codes. I hope to see you subscribe to one or all of our products. Been a pleasure, folks. See you the next time.
I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear. I know it's been on your mind for a while, but to get what you really want can take some time. You gotta be focused now, don't play around, and trust the process and keep your eyes on the prize. I can tell you what I'm seeing. You can have it if you dream it. Just be brave and you'll achieve it all. It all. I wanna know if you really want it, and if you do, then just shout it loud and clear. I wanna know if you really need it, and if you do, then just shout it loud and clear. Loud and clear, loud and clear, loud and clear. Shout it loud and clear, loud and clear, loud and clear, loud and clear. Shout it loud and clear. And there ain't no stopping now. You're the one. Shine brighter than the moon and the sun. Be great at what you do. Give it all of you. And trust the process and keep your eyes on the prize. I can tell you what